Welcome to the next Need to Know update from the assurance team at the External Reporting Board. My name is Misha Peters and I head the team, and you are in fantastic hands today because you are going to be hearing directly from all of our project managers who have been pretty busy over the last 6 months, so there's lots to cover today. Just a brief reminder that the slides as well as the recording will be available on our website after this event. We also encourage you to use the Q&A function, please. So if you do have any questions, pop them in there. We'll do the best we can to answer those questions towards the end of the webinar. And if we run out of time, we'll contact you directly. So what are we going to cover today? It's a busy agenda. We are going to go through recently issued guidance, which supports applicable standards. Then we're going to cover recently issued standards, and there's quite a long list of those. Then we're going to cover open consultations so you can get a sense of how you can contribute. And to close, we're going to give you a sneak peek of some matters that are coming up. So without further ado, I'm going to hand you over to Bruce to talk about less complex entities. Thanks, Bruce.
Cool, thanks, Misha. Hey, everyone. So the auditing standard for audits of financial statements of less complex entities, or the ISA for LCE, was approved in June last year. It's an auditing standard that's available for use by auditors if the entity has the characteristics of a less complex entity, or LCE. The standard can be used on the whole general purpose financial report, so the financial statements and the service performance information and entity information if applicable. And it's applicable for periods beginning on or after 15 December 2025. And I thought today we'd start off with some of the key messages or key aspects of the standard. It's a standalone standard. It's tailored to the needs of an audit of a less complex entity. So standalone is you just use this standard to undertake the audit. You don't need to go off and refer to any of the other ISAs or NZAS1. The standard is built on the foundation of the current auditing standards, those ISAs. So audits performed using the standard provide the same level of assurance as the full ISAs. That is reasonable assurance. Using the standard does not change the quality of the audit, does not necessarily mean less work for the auditor, and does not necessarily result in lower costs. It really recognises that this is a different audit, not a lesser quality or a scaled down audit. It's about doing the right work, including the right amount of work in the right areas, and having proportionate requirements to drive that work. Now, in deciding whether or not to use the standard, the auditor uses Part A, known as the authority, and they apply professional judgment in determining whether the entity is a less complex entity, and thus if they can use the standard. And of course, they would document their judgment. So let's go over to the next slide. And we're pleased to hear at the last Audit Assistant Conference enthusiasm for adoption of the standard, and that there will be development of methodology and audit tools to enable adoption. Our role at the XRB is obviously to issue the standard based on the feedback we had through the consultation process over a number of years. There's great support for adoption of the standard in New Zealand. We also develop and issue implementation guidance. So some of the things we've developed so far, first off, supplemental guidance on the authority of the standard. This covers the specific prohibitions, so the entity types that just can't be audited with the ISA for LCE, and also the qualitative characteristics of a less complex entity to help auditors determine and document whether the entity that they're about to audit is a less complex entity, and so whether they can use the standard. We've recently issued some illustrative auditors reports for 10 different scenarios that cover things like modifications over service performance information, a qualified audit report for group financial statements, and a disclaimer of opinion, and others. I've been roped into presenting a few short videos about the standard, covering the introduction, navigating the standard and when to use it. We've also got on our website a recording of the deep dive that we did last year into the ISA for LCE. There's also links to guidance and other resources that have been published by the International Auditing and Assurance Standards Board, or IAASB. Of particular note is a really handy guide that they've produced, the First Time Implementation Guide. This guide provides an overview of the ISA for LCE's concepts, structure, and format. It offers step-by-step insights into each part of the standard with examples and comparison to the international ISAs. So I really recommend having a look at that. Also recently, we've updated our webpage around the description of the auditor's responsibilities. And these are the pages that an auditor links to in the auditor's report. So when you're issuing an auditor's report under the ISA for LCE, you can link to the relevant page on our website. On to the next slide. Just a note here on audit clients with service organisations. So the definition of a service organisation is on screen. And where service organisations are used by clients can be in external bookkeepers, accountants, payroll support, or where specialist systems or experience is needed, such as investment managers. Procedures that the auditor undertakes using the ISA for LCE when an entity uses a service organisation are set out in those paragraphs that are shown on screen. We've put the links there, so when you download the slides, you can go straight to them. The standard says that a service organisation may engage a service auditor to prepare Type 1 or Type 2 controls reports. These can provide information to the auditor in obtaining an understanding of their client system of internal control. We've heard feedback from auditors about the use of Type 1 or Type 2 reports in practice and how they may be used in audits of less complex entities. We're actively exploring this issue and will look to develop further guidance such as FAQs in due course. But please do get in touch with us if you'd like to share your views on this matter. On to the next slide. We've got a quick poll here. We're particularly interested if anyone's out there using the ISA for LCE now, and what implementation support guidance that you've found useful. And finally, is there any other guidance that you'd find useful for us to produce for New Zealand? Now, you can either type it here or send us an email later. As a reminder of the implementation support guidance you can see on screen. So the first step is the supplemental guidance on the authority of the standard. So that walks you through the specific prohibitions and the qualitative characteristics. We've got the illustrative auditor's reports, so the 10 different scenarios. We've got those short videos and deep dive video. We've got links to the IAASB's first time adoption guidance, other IAASB guidance, and finally, the auditor's responsibilities webpage for when you come to issue an audit report. Just wait a few more seconds for people to finish. And certainly if you do have any ideas, please do send us an email on that, or if you want to discuss the use of service organisations when using the ISA for LCE, we'd like to hear feedback on that as well. Okay, we can end the poll. Thank you for your responses. Now I'll hand over to Lisa. Thanks, Lisa.
Thanks, Bruce. So hi everybody. So yesterday, first up, I'm going to speak to you about guidance for service performance information. So in response to feedback on the consultation for service performance information that we did last year, we've recently issued guidance for both preparers and assurance practitioners. So firstly, I'll just take a look at the preparers guidance with you. So it's a series of fact sheets that are aimed to help preparers understand the process of reporting service performance information. So the resources are going to be useful for public benefit entities in navigating the challenges and applying the reporting standard, which is PBE FRS 48, Service Performance Reporting. The fact sheets have been grouped into 4 areas. So the first one being purpose and scope of service performance information reporting. considerations before the reporting period, and then considerations during the reporting period, and then continuous improvement around service performance information. So as I was saying, although this is primarily for the preparer, the reason I wanted to raise it with you today is because I actually think it'll be really helpful information for you when engaging with your clients. And it would also be really great if you could help us and promote this guidance with your clients. The accounting team are going to be putting a spotlight on each of the fact sheets over the next half of the year, so I'd really encourage you to sign up for the accounting alerts so you can receive them. Otherwise, I've actually put a link here on the screen down in the bottom of the centre there, and this is where you'll find the fact sheets on the External Reporting Board website. So the next guidance that we've issued is the assurance guidance, and that's focused on obtaining audit evidence for service performance information. So the guidance is made of two examples, one that's focusing on qualitative information and the other one that focuses on quantitative information. So I've used these case studies to illustrate some key themes which are outlined here on your screen. So I'd just like to take a moment just to call a few of them out. So the first one, the understanding the entity. It's really important to understand why the entity exists, what it intends to achieve, and what activities and services it performs, and also getting an understanding of its service performance reporting process. And you need to focus on what is important to users, because it may not actually be necessary to obtain evidence over every service performance measure. Risk assessment is key. So what is sufficient appropriate audit evidence needs to be considered in the context of the assessed risks and the audit approach to mitigate those risks. And think outside the box. Think about different sources of audit evidence beyond the systems and processes that support financial information. The last one I just wanted to focus on is that auditors can assure qualitative information when it's factual and directly observable. So an approach may be to consider breaking up any long pieces of text and focusing on the facts. So there's a link to this guidance on the screen, and that'll take you through to the auditing standard page for Service Performance Information Standard, which is NZAS1. And if you scroll down, and you'll see this guidance under the additional information section. So thanks for now, and I will pass you through to Sharon.
Thanks, Lisa. Good afternoon, everyone. So the XRB has recently issued some new auditing standards. They were issued December 2025, and these new standards cover the auditor's responsibility for fraud, so that's ISA NZ 240, and going concern, ISA NZ 570. The new standards are applicable for accounting periods beginning on or after 15 December 2026. Early application of those standards is not permitted. The new standards are based on the international standards. So the new fraud standard, it clarifies the auditor's responsibilities relating to fraud in a financial statement audit. It emphasises a fraud lens in the auditor's risk assessment or risk identification and assessment, and in responding to those assessed risks. It provides for enhanced communications with those charged with governance about fraud-related matters, and greater transparency in auditors' reports of FMC reporting entities with a higher level of public accountability. So the new standard sets an expectation that fraud-related matters will be addressed through the key audit matter mechanism. Professional scepticism is critical to the auditor's consideration of fraud, and the new application material in the new standard is enhanced with a focus on professional scepticism, having an inquiring mind, the critical assessment of audit evidence, and remaining alert to indications of possible management bias and possible misstatement. The new going concern standard significantly enhances the auditor's work in evaluating management's assessment of the entity's ability to continue as a going concern, and it introduces clear statements in the auditor's report about the appropriateness of management's use of the going concern basis of preparation and the existence of material uncertainties related to going concern. So if we move to the next slide, these next two slides are quite busy. They go into detail about the explicit statements on going concern that are included in the auditor's report. So for all entities, the auditor's report will include either a going concern section or a material uncertainty section. And the auditor will explicitly state that they have concluded that the going concern basis is appropriate. If the report includes a going concern section, then the auditor would also state that a material uncertainty has not been identified. If the report includes a material uncertainty section, then the auditor would state that a material uncertainty exists and would include a reference to the related note disclosure, and also state that the auditor's opinion is not modified in respect of the matter. The auditor's report also includes statements that the auditor's conclusions on going concern are made in the context of the audit of the financial statements, and that is not a guarantee as to the future viability of the entity. For audits of FMC reporting entities considered to have a higher level of public accountability, so in addition to the statements that were on the previous slide, when significant judgments are made by management in concluding that no material uncertainty exists, or when a material uncertainty does exist, then the auditor is also required to describe how they evaluated management's assessment. So, for example, that description might include a brief overview of the auditor's procedures, an indication of the outcome of procedures. It could include aspects of the auditor's response, including how the auditor evaluated management's plans for future actions, or it might include observations with respect to the events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. So moving to the next slide, to support implementation, staff of the XRB has been developing some guidance. Now, we are working on guidance for auditors, for preparers, and for those charged with governance to support implementation of the standard. That guidance hopefully will be issuing even sometime in April. So look for that soon. We'll also be performing some awareness raising activities over the next few months. We're still developing plans and timelines for that activity. So keep an eye out on our website, in our audit and assurance alerts, for LinkedIn posts for more information as in the following months. I'll now hand over to Anna, who's going to give you some further updates on some recently issued standards.
Thank you, Sharon. In February, we reissued most of auditing standards. We did it to compile conforming and consequential amendments that result from various recent projects. The first type of amendments result from newly issued fraud and going concern standards that Sharon has just mentioned. Another type of amendments results from international revisions relating to publicly traded entities. international auditing standards have been adjusted to revised to consider to recognize the fact that entities of significant public interest are not only listed entities, but all publicly traded entities. In New Zealand, for a long time, we recognize that entities of significant public interest are those entities that are FMC reporting entities, having higher level of public accountability. This group is broader than publicly traded entities. So after careful consideration, it has been decided that there is no need for revisions in this respect in New Zealand auditing standards. However, we are bringing some additional introduction and explanatory material that is in the international standards, so that our so the wording of our standards is as close as possible to the international wording. The next type of amendments is just enhancing our auditing standards for the drafting relating to secondary legislation. This is just so that we are on top of the best practice for the secondary legislation in New Zealand. And finally, we made some editorial changes. This includes to remove word revised from the titles of the standards, just to simplify our naming convention of the standards. At the end, I should mention that we are working on the issue of assurance standards, and they will include a similar type of amendments. So now I can pass to Karen.
Thank you, Anna. So I wanted to start off by talking about some recent revisions that have been made to Professional and Ethical Standard 1, PES 1. And these revisions are relevant to financial statement auditors and those providing doing review engagements. So these amendments relate to a new principle-based framework, a principle-based ethical framework that covers competence, capabilities, and objectivity. And it is a framework that is designed to enable an auditor to gain the confidence needed about the competence, capabilities, and objectivity of an external expert when they use the work of that external expert. So there are 5 steps to this framework, as shown on the screen: agreeing the terms of the engagement, a requirement to evaluate the competency and capability and objectivity of the external expert. And one that I wanted to highlight is a requirement to obtain written confirmation from that external expert on their objectivity as part of deciding whether to use the work of that external expert. And then there are various documentation and conclusion requirements. And if you do assess that the expert is not competent, capable, or objective, then you are not allowed to use the work of that expert. All of these revisions are applicable for periods beginning on or after the 15th of December 2026. So moving on from PS1, I'm delighted to announce that we have recently, in the last few weeks, issued 2 new standards. The first of these internationally aligned standards is ISA NZ 5000. This is a new engagement performance standard which covers general requirements for sustainability assurance engagements. And PES 1, and we have reissued PES 1, and this includes a new Part 5 to the code, and this Part 5 is specific to sustainability assurance engagements. Both standards are applicable for periods beginning on or after the 15th of December 2026, and they have been designed to work together and have been released as a package to work together. So firstly, a few considerations about this sustainability assurance engagement. So Sustainability Assurance Standard ISA NZ 5000. It revokes the two standards, ISAE NZ 3410, which is the NZ standard for the assurance of greenhouse gas statements, and NZ SAE 1, which is our domestic temporary standard, which covers the assurance of greenhouse gas disclosures. It will be the standard to be used for the mandatory assurance of the greenhouse gas disclosures that are required by the Financial Markets and Conduct Act 2013. And it is a standard that can be used for voluntary sustainability assurance. So it can be used going forward for the assurance of other disclosures within the climate statements, for example, other than the greenhouse gas disclosures. It is a standard that is broader than 3410. It has requirements for value chain and also requirements for when work is used by when you intend to use the work of another practitioner, and also for group sustainability assurance engagements. Next slide, please. The Ethical and Independent Standard PES 1, as I said, there is a new Part 5 to this standard, which is a standalone standard for the ethics and independence requirements for sustainability assurance engagements. This includes similar requirements to those of financial statement, audits for use of an external expert, and the independence requirements mirror those of a financial statement audit. It also includes transitional provisions for when you first adopt this standard. This standard also includes areas such as the requirements and application material that specifically address ethics and independence considerations when providing non-assurance services to sustainability assurance clients. It also includes requirements and application material that relates to when assurance work is performed at or includes a value chain component, or when the assurance practitioner intends to rely on the work of another practitioner. Now we have issued those standards, we are now planning out our adoption and implementation guidance and support. And in that regard, I had a small poll, which I hope that you can answer. The questions in the poll are: do you assure greenhouse gas disclosures? What implementation support guidance have you found useful? So we've included the implementation support guidance that we have done for the for NZSA 1, and also what other implementation support would you want the XRB to consider as we transition to these new standards? What would be useful for that? If you you can email through any replies to question 3, for example, through to our inbox. And I thank you for all of your feedback. We'll just give a few more minutes for the polls to be completed. Thank you. And I see we have quite a few greenhouse gas assurance providers in the audience. So thank you all for your time. And I will hand over to Lisa now.
Thanks, Karen. So at this time I'd like to update you on some post-implementation reviews that we currently have underway. So the first one I'd like to take you through is ISA NZ 540, which is the auditing standard for auditing accounting estimates and their related disclosures. So this standard was revised in 2018. So first of all, let's take a look at why it was revised. It was to address some public interest issues, one around audit risks, which were evolving due to more complex business environment, to foster improved exercise of professional skepticism, and to realise some public interest benefits through improved communication and transparency. So what do those revisions look like? So there was the introduction, they introduced the concept of inherent risk factors and enhanced risk assessment procedures. It emphasised the importance of auditor decisions about controls relating to accounting estimates. It introduced objective-based work effort requirements for methods, data, and assumptions. Enhanced standback requirements and audit evidence requirements for disclosures. And a new requirement to consider matters regarding accounting estimates when communicating with those charged with governance. So we're now seeking your views on whether these revisions have actually achieved their intended purpose and how they're working out in practice. We're interested in hearing what improvements and benefits that you have observed in applying the standard, and any practical challenges or issues that you might be having. So if you can provide us your feedback by downloading a copy of the survey, which is on our website, and I've provided you with the link here, or you may just want to drop us an email. Whatever way suits you best to provide us with some feedback, we would love to hear it. We'd just like to hear from you. So comments are closed for this post-implementation review, or PIR, on the 13th of May. The next one that we have underway is the restructured code, which was in response to stakeholder concerns around the structure, the clarity, and the usability of the code. So in the 2018 code, it included the following structural changes. There was increased prominence and emphasis to comply with the fundamental principles and to apply the conceptual framework. It clearly distinguished requirements from application material. Increased clarity of responsibility in relation to independence, and improved the readability and understandability of the code. So we're seeking feedback on whether the enhancements are being consistently understood and whether they're achieving their intended purpose. And we expect a survey to be on our website, the XRB website, for this PIR, or post-implementation review, in early April. And then the third one is the non-compliance with laws and regulations, which is commonly referred to as NOCLAR. So let's just take a minute to actually have a reminder of what I mean by NOCLAR, and I'll give you a chance just to read this description on the screen. So as you see, NOCLAR is an act of omission or commission, intentional or unintentional, which are contrary to the prevailing laws or regulations committed by a client and those other people that we've got listed there on the screen. So what are the NOCLAR provisions? So it's an ethical response framework to guide the assurance practitioner on how to best act in the public interest when they become aware of a NOCLAR or a suspected NOCLAR. And the framework guides the assurance practitioners in how to assess the circumstances and possible courses of action. So we're looking for feedback on whether you've noticed any observed trends and outcomes from applying these provisions. So when you come back from your Easter break, please keep an eye out for this one as well. We will be promoting them on our assurance alerts, so if you haven't signed up for those yet, please do so, that'd be great, or on LinkedIn, and the survey will be available on our website. So thank you, that's all from me. So now I'd like to pass you back to Karen.
Thanks, Lisa. And I'd like to talk to you about a recent consultation on the 2028 to 2031 Audit Assurance Ethics and Independence Strategy and Work Plan. So this is a consultation or a survey from the two international boards, the Audit and Assurance and the Ethical boards. This consultation recently closed on our website, and thank you to all of you who have submitted feedback to us. It has been really, really useful as we are drafting our response, and it has been invaluable to that. It has closed on our website, but it does close. We do not. The submission closes internationally in a few weeks. So if any of you do want to come back to us with any suggestions or anything that you want us to be aware of after this presentation, then please do email us and let us know. So the two international boards identified four major environmental trends. The first of these trends was digital transformation, including the rise of AI and technology. The second was the changes in the geopolitical and regulatory landscape and how that is changing internationally. The third is evolving expectations concerning sustainability information and assurance and reporting. And the fourth was evolving structures and business models of accounting firms. That's including different investment models and attracting and retaining talent within accounting firms. We have drafted our response to the survey, and it is going to our board tomorrow. And I wanted to share with you some of the key messages that we have included in that draft response. So in that draft response, staff have indicated that we believe technology to be the most significant disruptor of audit and assurance standards going forward, and to have the biggest impact on the strategy and work plan going forward. We expressed our support for the principle-based standards and also encouraged clear understanding of cost and benefit of future standard setting activity, particularly in a rapidly changing geopolitical and regulatory environment. We encouraged continued coordination between the two standard setting boards, and that's particularly where issues impact both the code and the audit assurance standards, and encourage those to be able to be coordinated and timed so issues and impacts could be considered holistically by stakeholders. We identified the need for audit and assurance standards to be scalable and proportionate, and for standard setters to continue to be responsive and timely and agile. And we indicated and noted increased demand for assurance standards for non-financial information and broader audiences. And now I would like to pass you over to Tinus, who will talk about things that are coming up.
Hello, everyone. Yes, thank you, Karen. As Karen has mentioned, I will be talking about a few topics that are coming up. And as Karen actually mentioned just now about technology, everywhere we go, we hear from our auditors and stakeholders about using emerging technology in audits. It would therefore be remiss of me to not tell you about the work we are doing in technology in two areas, namely technology quality management and the audit evidence and risk response project. So next slide, please. Firstly, I wanted to let you know that that technology as a topic is one of the XRB's strategic priorities, and we have had a number of detailed discussions with auditors and other stakeholders around this topic, and we did not identify a specific urgent need for New Zealand specific guidance, but we are continuing to actively monitor the circumstances as it might change as technology develops. We are also aware that in New Zealand, the size of the firms and the way that they are structured might create different needs for guidance. And at the moment, we have updated our technology webpage, and it contains resources from the ISBA on ethical standards and from the ISSB on the ISOs. So you're welcome to go and look there at the resources that's currently available, and we will update that on a regular basis. At our last Need to Know, I have also mentioned there that there will be technology quality management roundtables internationally. There was also one that we co-hosted in Auckland, and the outcome of that discussion was that the quality management standards remain fit for purpose, but that non-authoritative guidance is needed, particularly in how to quality manage the use of emerging technology in the audit. We have also agreed that that this guidance will be developed internationally so that there is consistency amongst auditors in different jurisdictions. So, next slide, please. So here I'm going to just give you a brief overview of the guidance that is being planned on technology quality management. So there is a plan to have a series of guidance, and it will cover 3 levels or 3 layers. The first layer is onboarding of a third-party tool. So this relates to, this is because firms generally purchase a third-party tool rather than developing it from scratch. And so the quality management considerations here would include selecting an appropriate third party and approving that tool for use by the firm. The next level will be governance over customizing third-party tools. This is where the firm takes the third-party tool and further develop it or customizing it for their methodology and their needs. So the quality management considerations here would include things like, testing the amendments that's been made and taking it through a change management process and monitoring it as it's being used, as examples. The third layer or level is at the engagement level, and this is where the quality management considerations relate to the direction, supervision, and review of the engagement when a tool, an emerging technological tool has been used. And it could include also things like what is the documentation requirements that are needed. Right. Then the time frame of this guidance, it is currently underway internationally, and we expect it to go until July 2027. So during this period, we will monitor the developments and we will have discussions with auditors to gain their feedback, and we will provide that through to the New Zealand member on the ISSB so that we have the New Zealand context in those guidance. What I can also say is that we will promote this guidance when it's being approved, so that you're aware of when it has been released. Okay, next slide, please. So the next topic is on the Audit Evidence and Risk Response project. The standards being revised relate to obtaining audit evidence as well as evaluating audit evidence, and they are being considered concurrently. So the standards here is ISO 330, your risk response to your risk assessment, and ISO 520 that relates to analytical procedures as one of your responses to your assessed risks, and then audit evidence ISO 500, looking at the relevance and reliability of audit evidence. Okay, so there's 4 key revisions, four key aims of revising these standards. The first being to further improve the application of professional judgment and skepticism. So here they are thinking about whether there's a need to have additional standback provisions, and how can the requirement of considering the relevance and reliability of audit evidence be strengthened with additional application material to help the auditor making judgments. The next aim is to encourage the use of tested controls. Here the plan is to clarify when internal controls should be tested, and also describing how the results of tested controls can be used to your benefit in other areas of the audit. And then the third aim relates to technology. So they want to facilitate and encourage, where appropriate, the use of technology. So there has been a lot of discussion here, and at present there could be application material that describes how the principle-based requirements in ISO 330 and ISO 500 apply when you use technology in the audit. The fourth aim is to promote consistent practice and auditor behaviors. Here, they want to highlight the importance of the risk assessment process and how to appropriately respond to those assessed risks. And then lastly, I just wanted to mention that we expect the consultation to start in July 2026 internationally, and we will do outreach activities at the same time. And that is all from me. So I will hand over to Misha to wrap up the session.
So thank you all for following us through quite a whirlwind tour of quite a lot of updates. To wrap up, I thought I would give you a couple more reminders. Firstly, just to remind all of you auditors out there that there are 3 requirements under primary legislation to submit modified audit reports through to the External Reporting Board. So those requirements sit in the Companies Act, in the Financial Markets Conduct Act, and also in the Incorporated Societies Act. So if you are issuing modified reports relating to audits done under those acts, we've tried to simplify this process, and the instructions are there on the slide. So really you have to sign up or sign into our website, complete a form and upload the PDF, and then hit submit. So just a reminder, and we hope that you find that process simple enough to follow. The other thing that I thought I would just do a reminder about is 3 pages on our website where you can find information which is hopefully useful to you. The first is the web page on auditors' responsibilities. And as Bruce reminded you all when we were starting this update, those have been updated now and include links. So if you are intending to use the auditing standard for less complex entities, you have links to the relevant web pages now there on our website. The second useful link there is to our Standards Navigator. So that is where the standards are in a searchable HTML format, and it's super easy to flick between requirements and application material and do some great searches. So if you haven't used that navigator yet, I encourage you to do so. The third area is the history of approvals, which lists all of the standards that have recently been issued. Now, if you click on that link, you may feel a little bit of a wow factor, because it's all of the auditing standards, as we've covered today, and as you heard from Anna, largely that reissue is about incorporating all of those conforming and consequential amendments. So it's nothing to alarm yourself about, but we have reissued everything just so that all the standards are nicely tied together going forward. So we haven't quite got all of those reissued standards into Standard Navigator yet. We're working through that, and we hope to have them all in there well before those mandatory dates which kick in at the end of this year. So that was the reminders from my end, and now really is the opportunity for you to drop all of your questions and comments into the Q&A, and we can have a go at passing you through to the appropriate person to help you navigate through to that. So while you're thinking of your questions, first of all, wanted to again thank you for participating in the polls. It's really useful for us to hear about where our guidance is hitting the spot and where else you need additional support from the External Reporting Board. So thank you for the comments coming through that you sort of thought that the service performance audit guidance has been really practical and easy. That's great feedback, and we really do value that. So keep letting us know the ones that are useful as well as those that aren't, so we can manage and prioritise going forward. There's another interesting question there coming through around, I think, our process or thinking to support the implementation of the fraud and going concern standards. So the questions come through as to whether there's a way to sign up to a group email. I think we're still putting together our plans to support implementation and support, so we'll let you know if there is a way to or a need to do that going forward. And then Karen, there might be one for you relating to the use of experts changes. So the question that's been raised is regarding the PES 1 CCO change. Is this specific to the use of management expert?
Thanks, Misha. So these changes relate to an expert that is engaged by an assurance practitioner or by the assurance practitioner's firm. So it's assurance practitioner's expert that these changes relate to.
Thank you, Karen. Another question that's come in is about modified charities reports and whether there is a need to file modified charities reports with the Charities Office. I think I'll just go back to that slide quickly. Oh, hold on, what's going on here? If I can go back. I just wanted to, in terms of charities, there are many different structures for charities. So the requirement to submit modified reports is linked to the specific acts that are shown on this slide, the Companies Act, the Financial Markets Conduct Act, or the Incorporated Societies Act. And it depends whether your charity, what kind of legal structure, whether this requirement applies to them or not. So I think that there's sort of more of a nuance to that question, and I hope that answers what you have requested. If not, let me know and we can try and clarify that further. So far those are the questions that have come through. We do probably have a couple more minutes if anybody has any further questions. Otherwise, I'm sure you are all looking forward to a lovely long weekend, and we wish you all the best over the long weekend. Thank you for joining us today, for your questions and for participating in our polls, and we look forward to keeping in touch in due course. Thank you for joining. Mā te wā.